Good afternoon. My name is My name is Scott Redler. I am the Chief Strategic Officer at T3Live.com. After a week like this, I definitely could be mumbling a little bit. Came in today not knowing what was going to happen, right? We figured, opening down 15 handles are going to be down 30, or are we going to be down 7? So I think we're down 7. So same type of trend. We said look for a few different things to figure out today's action. One, would the S&P cash hold the 21-day? Okay, it's been holding it. That was the low from last Friday. And then would the Qs hold the 50-day from Monday morning's flash lower, or do a red dog reversal around it? So within, again, the first half an hour, a lot of these levels held, and then we grinded back. Some things acted better than others, but if you didn't come in short, you couldn't really make money short. And again, there were just the way we opened up, and there've been better sells than buys. If we open lower, there were better buys than sells. So that's what you call a range. You look here at the chart of the S&P cash. So all in all, not saying we're in the strongest, easiest environment, but what did we do here? We held the 21-day moving average, which was a better buy than a sell. Still trapped in this upper little channel after breaking above this resistance here. So all in all, what could you say about it? It's kind of constructive for the bulls, but I'd be cautiously bullish, very selective. You go to the Qs. Okay, the Qs broke below the 8-day moving average last Friday. If you sold here, you had a flash down Monday, you had a red dog reversal. So if you tactically got long right here and sold into resistance, why would you sell into resistance? Because that's where the 8-day was. That's what we mapped out, and that was a likely spot after a 3-day bounce. So if you sold into resistance, which was pretty much a floor that was here, or when it hit here and then got back below 140.56 and came in flat, you said, hey, I'm going to see how we react around the 50-day, around Monday's low. And what happened here? We hit it and bounced off it. Not sure if we open up tomorrow, but it does seem like market could have fallen down today and it didn't, so maybe there's another bit of a bounce back towards here, or not. At this point, just as hard to, I almost just hard to be long as to short. Today, instead of being flat, I'm long a little bit of tech, and I'll show you what. You look at something like Amazon, same thing. All these things look very similar, where you have to be very, very selective on your entries and exits. Amazon, here was your sell when it broke the 8-day moving average. Then, if you recall, on this day, I made a higher low above the 50 because this was like a Friday low volume break it out, which wasn't real. And then we were long it overnight. On this day, got a little bit of upside. It was long overnight again, sold it into resistance. And now here you have a small bottom tail on the 50 days. So if gun to head, I'd say be long for maybe a move to retest this spot, which would make it a lower level wedge. I'm not in Amazon though. Google, I think, was downgraded, but it kind of acted the same way, where if you bought on the red dog reversal here and selectively sold into resistance where it got rejected, you had another chance this morning to buy verse the Monday low, and good day trade. You don't have to take it overnight if you don't want to, and if you do, maybe you do get a move up to here on a Friday. Broke this spot here. It's still in a lower level, little channel here. I'm sure if I do Facebook, it's going to look similar. What a coinky dink. Okay, if you happen to have sold Facebook here and bought it back on the red dog reversal, you could have got out yesterday when it went above the prior high here of 151.18 and then came back below it. I was actually short, but I didn't take it short overnight. Anyway, look at this, even stronger. A higher low. Didn't match it like the Qs, right? The Qs matched. This made a higher low, so that means it's a little bit stronger, so maybe it's a better candidate to be taken home. I actually traded Apple this morning thinking, hey, what's going to happen here? Maybe it holds, what's it called, the Monday low, or maybe it does a red dog reversal. All in all, though, I wasn't long it overnight like I was the past few nights. Let me move this down, sorry. Okay, right here is where it broke. Looked like a wedge to be broken to the upside. Instead, it gave longs a wedgie to the downside. Anyway, you could have got out here. Then you had this trade off the low, gave you a feeble bounce. Now today, you had a little bit of a red dog reversal. Okay, here, this is the low. This was 142.51, went below it to 142.21. You could have bought it here. 30 cent stop. and you could have made $2 with 30 cents worth of risk. In the first hour, it happened. So you could have sat in it all day, went to the gym, went for lunch, came back and said, hey, look at that. I had 30 cents worth of risk and I made $2. Now, what I'm going to do, because sometimes you get a little follow through, I'm going to take a third home just in case they want to open it up a little bit as it's stretched from all the moving averages. But you don't want to take too much because it's below all the moving averages. And we like to hold stocks when they are above the 8 and the 21-day moving average, not below. But sometimes you can trade for a scalp. BABA came in. Still just grinding lower. If you sold strength like I did after this big gap up, maybe you keep testing it here. I'm long some overnight, not a heck of a lot. It's saying it closed at 134.64. Is it really? No, I think it's closer to 135. But anyway, until it breaks above this, I would be very light. Just take day trades versus pivots. It got into the gap and couldn't fill it, came back above it. So maybe there's a little better action tomorrow. We shall see. This morning, I talked about, can the banks go green? And why would I think of that? Because maybe yesterday the Fed raised rates and it could be a September, it could be a December or not. So I went to Bank of America, bought a little bit of that down 20 cents. I bought a little bit of Goldman Sachs, and Bank of America went up and Goldman Sachs lagged. So I sold some Bank of America, held some. Goldman Sachs couldn't go, just got rid of both, and now I'm not in a bank. If you look at the banks now, not the greatest looking charts, not the end of the world, but still above this spot here, but a small topping tail, still below this resistance. So to me, it doesn't look like much to do. Goldman Sachs was weaker all day. It's not the end of the world, but still above this spot. Just not a great-looking candle if you're in it still. Versus, this moving average. Then that's why you're in it. Okay, for me, I'm going to wait. I don't love the banks as it is, and I'm not that sure we're going to raise rates. And at this point, I know I was trying to be long in the morning and it didn't work and I lost money. So I'm like, you know what, I'm going to get out of the way and see what happens here at the moving averages maybe tomorrow. What the IBBs do, the IBBs also didn't really, act very special, but it also didn't fall apart. Held this 291, couldn't hold the 294-ish. So if you sold that out, maybe you bought versus 290, you got in around 291, but ultimately still in this range and not truly, showing its outstanding colors, because there are no outstanding colors right now. It's just a potential upper level flag that could break higher if the market isn't that weak or not. We've seen this before. Trying to show some commitment to this red dog reversal here, so we'll see. So in conclusion, it seems as if the bears had the ball again today and they didn't do much with it. We had the Fed day yesterday. We closed near the highs. We opened lower. If you were long, hopefully you didn't get shaken out too early in the morning, because by 60 minutes in, things put their low in and they rallied back. If you didn't come in short and you shorted the first hour, you didn't feel too good at the end of the day. If you came in flat, there were definitely some things to do, not a heck of a lot, but there were ways to trade versus the 50-day in the Qs versus the 21-day in the S&P, and then in particular stocks that showed some relative strength that you could have played along with, but there weren't a ton of them. So we'll see what happens tomorrow. It's quadruple witching. Sometimes they do a lot of shenanigans, so take some care. I wouldn't be too involved, but there will be also a rebalance, which I don't do too well. That's not my game, but guys will be looking into that for the close on Friday. I'll be in Short Hills. My radio does work, but there'll be no videos by me. Have a great night, and if you're looking for a video, you'll get one Monday morning. Have a good night.